So, war jitters, ladies and gentlemen. What a story it is. The US has got FOMO. Trump has got FOMO. He wants to get involved, and word on the street right now is suggesting that the US will be intervening likely tonight in this Israel-Iran war. It's getting absolutely wild. We've been hearing lots of back and forth story that the US is going to borrow a B-52 bomber to Israel, and then it's saying that it's going to borrow the rockets, but Israel's like, we don't actually have a B-52 bomber, so what are you doing? So the US is like, all right, fair enough. We'll just get involved then. If you haven't got the actual plane, then okay, we'll take advantage, but never mind. Good evening, ladies and gentlemen. How is everyone this evening? Like, it's been crazy. Bitcoin takes a bit of a tumble, but it's doing all right now. But is this a little trap for the FOMC? Could be. What are your thoughts on that? Who's with me tonight? Who is with me this evening? It has been... I'm just gobsmacked by it all. Just watching it all just unfold. Honestly. How are you going to do anything in these markets? Trump just come out of the situation room. And the situation is he's ready to go to war. Not bad, eh? Increase the debt ceiling. Put on some tariffs. Chuck in a little war. Hello, inflation. Oil up 4%. Yeah. We know the Fed tomorrow is just going to be keeping it simple. No rate cuts, ladies and gentlemen, in my opinion. This morning, they were pricing it in. Yeah, we're going to get rate cuts. But not now, I don't think. Not with what's going on. And tonight will be an interesting evening, to say the least, guys. That's something that I'm going to be telling you all. So let's just get in with the flavor, ladies and gentlemen. Put that silent. And just break down this absolute I'm going to keep it simple. Let's just break down the marketplace and let you be about your day. Israel, Iran. Let's get into the charts before we start talking about news. We know what the news is. Bitcoin takes a little bit of a tumble to the downside. Okay. Now let's go over to the NASDAQ. I came to the charts today and I was like, hold on a second. Wait, hold on. Like, what are we going to get? We get a little bit of a move and then we just get a burp and then that's it. When you're going on the 1 minute time frame, because that's where I like to look to navigate things. I'm looking at the things and I'm like, oh God, rotation day. So I'm like, okay, fair enough. There's nothing for me to do. If you're not making a move by at least 10 a.m. or even 10:30 Eastern Standard, there's no point. And then, of course, they made the move after. But during that time, war jitters, conversation about if there's going to be another attack. There was another attack. No chance. Didn't want to take the play, but they just dripped it to the downside. But is this getting prepped for FOMC? How many of you on the idea that it's FOMC trap? That's the question. Come on. Where's your heads at? When OnlyFans? There is no OnlyFans, man. Come on. Red suits me with this market. Well, my t-shirt is a representation of this market. Just come here, look. Bitcoin. Nice little W formation. I mean, these are things that you can exploit, guys, but it's getting a little bit chaotic. Let's go over to the Arkham for a second and understand where we are with things. So, 670,000. BlackRock. Did I see that? No. So, no one's selling. We've had some Coinbase deposit into Grayscale, so they've been getting busy about things. Have a look at the order flow. Ouch. Let me just kill that for a second. Trap. You all believe it's a trap? I'm glad you all think that because I think that's the case. But we already know, right, what the data is tomorrow. We know that the Fed is going to keep the interest rates as they are. And to be honest with you, the market's only been moving on very, very light volume. It's not really coming into play. Let's just quickly pull that up right now and have a look. Because the markets are still open. They are still open, but not really doing anything. They've just been rejecting these ranges like no tomorrow. What was this? Tina, the 4-hour vector candles, red vector, green vector. Explain it to the guys, mate. I got you. I'll explain it to you. Give me a second. Let's just have a look at the volume on the NASDAQ composite. Volume down again. Whoops. Hold on. Yeah. Volume is down. Even though it's selling, volume is down. So it's below average. All right. So even though the volume bar at the bottom right here is suggesting distribution from investors, as in selling, It is below average, which is why you're seeing this whipsaw price action. I mean, it's just Bitcoin hasn't done too bad. It's taken a bit of a tumble to the downside, but it's only been where it was during the start of on Friday. The euro took a shoe bag to the downside. Some nice setups today on the euro. We were favoring lower prices on the euro, and we saw the success of that move to the downside. So happy days on there. And the thing that's got my attention is gold. So if we're in a safe haven story, why on earth is gold not moving up? Well, because investors are all going over to oil. Oil futures were doing pretty well today. They spiked up. Where did I see that it was up 4% today? What was this? Why are you late? What do you mean, why am I late? I've been trying to get involved in options on NASDAQ, but because it's going sideways and options come with time limitations on time, I opened an option today, wanted to open an option today. Had one last night, but I wanted to open an option today, but because NASDAQ just stalled sideways for so long, I was getting closer to decay, and I was like, you know what, I'm not going to bother with it. And then when they started talking about this intervention with the US, I thought, for God's sake, Trump, man, just stick to your tariffs. Get out of this war. And he's been all week, he's been like, nah, I'm not getting involved, not interested. Now all of a sudden, he's interested. That explains why oil's starting to move up, which I do believe oil is going to keep on climbing. JP Morgan comes out with a nice comment saying that oil could effectively go to $138 a barrel. Well, the last time oil pumped up on scarcity and people being concerned about things was back in subprime mortgage crisis 2007, 2008. $150 a barrel, $149 a barrel. That's what that was. So it's one of those. Tino, don't you think we will have the same scenario like almost every summer? Big boys on yachts, bouncing, looking for swings in June. Crazy idea. You know what? I think the big boys are paying close attention to what's going on because they're going to be coming in, picking up things on the discount. Dollar dominance today takes a nice reversal to the upside. Happy days. Nice little structure. That's great. You know, your dollar's appreciating, but it's still below the 100 mark. So there's nothing really new there. It's nothing to be excited about. Okay. Well, you want to pay attention to the bond market. Where's the bonds? They're climbing up. So that's all right. The yields, they're coming down. So it tells you investors are scared. They're going into bonds right now. All right. But they're not going into gold because gold's only going to move tomorrow on the expectation that the Fed's going to cut. But it's close to its all-time high. And if the Fed says, yep, we're going to cut, I don't think Fed's going to cut this year, man. I just don't think it will. I really don't. And the only reason I think that is because tariffs and, of course, now this Israel war. And apparently it's going to go on for another 2 weeks. Maybe the US is stepping in right now to get the job done so that they can just get away from this madness of the war and then go back to business. But if the US is going to attack tonight, then it might be an interesting evening for Bitcoin, to say the least. Someone asked me a question just a second ago. Tina, oil to 130. Yeah, 138 apparently. Tina, what about the VIX? Do you need to check it? The VIX, well, thing is, when we check the VIX out, right? I mean, 6%, okay? That is really good. When it's high, you buy. The problem is when it's high, you want it to be above 30. That's what you want. You want the VIX to be above 30. That's a comfortable spot to be buying from. But because the VIX, it shows you that if investors aren't really plowing into the VIX, or not the VIX, but if investors aren't really that scared, the VIX is not really showing that, because when the VIX goes up, it's telling you that there's hedging systems coming into play. Investors are going elsewhere to hedge themselves on future volatility, right? But you can see here that it's not really going anywhere. I mean, if we go to the proper VIX itself, the Chicago Board of Trade, that's at 21. You know, 21.56. We need it up here, man. Like, we need it up here. That right there, guys, is a valid buy. That right there. When the VIX spikes, you buy. All right? And it does take a little bit of practice to, like, pin down the spikes. But it's when the news comes out, investors react to it. And then when the VIX is shooting up, everyone's wet in the bed. And then, of course, you start buying when everything dumps. Mad love to you guys as well, man. Mad love to you guys. Trying to find that comment again from Zach. Zach, that's the comment again. Red candle, green candle formation. Here we go. Tina, I told you now, if no cut and NQ quantitative easing, those altcoin moon boys will have a stroke. I believe that today, post FOMC may take it to the all-time high. Look, I said this yesterday. I would be more comfortable with prices coming down before FOMC than I would be prices going up before FOMC. Simple as. Because, guys, look, your Bitcoin hasn't gone anywhere, to say the least. Let's be honest now. There's nothing to be worried about. Bitcoin is holding above the 50 EMA. That is fine. This is during a war. This is during interest rates. This is during inflation. This is all sorts. Bitcoin is holding out very well. Very well. Okay? But all it takes is something stupid to happen. And I do believe that tonight, the market might actually react quite aggressively with this story about the US intervening. Because all week he wasn't going to intervene. Now all of a sudden he's stepping in. But I think he's only going to be stepping in because he does want to improve the odds of interest rates getting cut. Fed's going to turn around and say, look, oil prices are going up, even though they can't really use oil prices to determine whether they should be cutting the rates. And the CPI data and inflation does not factor in the cost of oil and food. It excludes energy prices and oil prices. Sorry, energy and food prices. Fucking hell. But what Trump's doing right now is either speeding up the process to end this war by intervening, taking the risk that oil's price is going to come up. It's unlikely it's going to be reflected in the next CPI reading, but look at where we are in the month. We're on the 17th. Now, it's next month. We're going to know if that's going to be the case, but the Fed's going to say, yeah, inflation's gone up. It could be an anomaly because of what happened with the war, and we're going to need more data, which then obviously decreases the odds of this interest rate getting cut. I just don't think they're going to cut. I really don't think. 54% in September right now to go down to 4 to 4.25%. All right, I just don't think that's going to be the case, guys. I really don't. Yeah, that's what I'm saying too. That the pre-FOMC, we're chilling at the lows, reset RSI, momentum indicators setting up for the high end of the week. Maybe. Any other questions, ladies and gentlemen? You see Citibank's projection for gold below 3,000. Why would Citibank be projecting a lower price on gold? Maybe because the interest rates ain't going to get cut. Makes sense, doesn't it? That then means that interest rates are going to be higher on the dollar. And if the interest rates are going to be higher on the dollar, in these current circumstances, what are you netting? You're netting yield. So then that would explain why the dollar dominance is going up, right? That would then explain why the bond market is going up right now. Where are we? Here we go. That explains that now. That explains investors are trying to lock in yield. Because they're at 3.9%, no interest rate cuts, higher rates for longer. It's now time to get safe and go into the dollar. Look at the yen. What are they doing? Yen down, dollar up. Does that mean... Hold on. On this channel, we talk about the whole story of Forex and all the fun and games, right? Yen down, euro down, dollar up. Well, when yen's down, that means they're selling it, right? So if they're converting it into dollars, investors are either going to be waiting for good news to then take those dollars and plow it into the market. But before they plow it into the market needs to pull back because they're not going to be buying at these all-time highs. So maybe this is a carry. Maybe the carry of the yen is coming down, going into the dollar to effectively prep it to go back into the stock market to then take out your all-time high because NASDAQ hasn't really done anything. It's only just come down a little bit. It's not broken any key significant structures. All right, one candlestick. So what I mean, if you're not capturing the move, it's just one candlestick, that's it. Then the rest of the day is just sideways dead. Very difficult times to be trading, ladies and gentlemen. You know, very difficult. But if this is being prepared for a rally tomorrow and good news from the Fed, or no news from the Fed and just keep the rates high, it's... How do you put it into perspective? It makes sense why gold will be coming down because if gold and euro have been deemed as safe havens, euro down, gold down, dollar up, someone's now going to want to put those dollars to work. Because yielding on a dollar ain't really that great because you're losing appreciation on the dollar because it's what? 98. That's dead. You're not making anything. You've got no purchasing power. It's not above 100. I don't know why I did that. But I think this channel is all about the collapse of the fiat system. The collapse of the fiat system, quite frankly, you're not going to get a collapse of the fiat system. You won't. You're going to wait till $37 trillion worth of debt to determine if a system's going to collapse. It just won't. You know why? Because the Dow Jones over the last 5 years is still positive 62%. That's with the fiat system. It's what we know. That's the truth. All we know is fiat. BRICS, come on, man. All of them have got their money tied up in dollars. Why is it every single speaker that's come out, Bank of England, Bank of Canada, Bank of Australia, right? They've all come out and said the dollar is the best. You know, always support the world's currency, you know, reserve currency. Dollar is the best. Dollar will always be the best. We can't do nothing without the dollar. There ain't nothing collapsing. There'll be a reset. And we always get resets. Expansion, contraction. That's how economies work. Come on, all you theorists, your theoretical guys with your economic theories. You know, expansion, contraction. Expansionary phases, contractionary phases. Rise and drop, and then expand again. That's the story. This is your moment. Tariffs will come back harder in the last quarter of the year. I think the market is getting ready for this. Yeah, but there's judges right now that are going to get people to petition against the tariffs, and he's going to allow the challenge of the tariffs. All right. So whether Trump overrides that is going to be another story. But if Trump's getting involved in a war, then the prospects of his tariffs and the chances of his interest rates being cut are zilch, because it's all inflationary. Now stagflation's coming into play. We want disinflation. You know, it's just... What do you think will happen if Powell were to raise the rates? Chaos. You would have chaos. I've said it before. Go and have a look at the bond crisis. Bond massacre, they called it, of 1974. When they came to the meeting and they were like, yep, this is what the expectation was. And they completely reversed, and the bonds just wet the bed. They collapsed. It was unbelievable. I obviously wasn't there, but, you know, read about it quite a bit. Citibank doesn't have a clue about gold. They were predicting 2,500 gold when gold was at 3K. Look, Goldman Sachs, JP Morgan, Bank of America, they're all going to come out with different reasonings for gold. But the only thing that you can come out with, and you got to look at their targets and what their client's expectation is. All right? You've got to look at the bigger picture of how people are reacting right now. You can see the instability of the marketplace. The market itself, here's something, fine, we're going to react to it. It's not technical analysis. It's emotional analysis, because it really is. All week, Trump has been saying, we're not going to get involved, not going to get involved. Now he's pulled his big boy boots on. We're getting involved, and it's going to happen tonight. When Bitcoin back bonds? Oh, the Genius Act. Yeah, well, that's going to be another story. Looks like the bullish divergence on Dixie on the weekly chart. Tina, what's your favorite strategy? V-shaped reversals. If I'm scalping, I'm looking for V-shaped reversals. If I'm trying to play a swing on an option, then of course it's just waiting for significant highs and lows getting taken and traps and vectors appearing above or below key moving averages. Like, the simple strategy for it is the first red vector candle that appears above the 50, the first red vector candle that breaks the 50 EMA after a move to the upside. If you go back and check it out and back test it, you'll find that after a significant move up and you see a red vector like this, it usually continues with the narrative to go lower. But when people back test stuff, they want from one massive swing high to another swing low. And then it's like, all right, didn't do it, so it's a terrible test. But tell me what's wrong in actually scalping that logic. And even if you were to enter at this point and Bitcoin slumps down, okay, $1,800 on the assumption that you close it at that point to trade to the sweep of the New York session right there, you're telling me when you're using leverage, you're not happy with an $1,800 move in Bitcoin. That's awesome. When you're using leverage, your goal as a leverage trader is not to be in the trade for long. It's to use the smallest amount of money within the smallest amount of time to make the most amount of money. That's your goal as a leverage trader. People don't do that. That's why you get smacked about with leverage trading all the time. You know? The Elliott wave, good guys. Okay. I heard an interesting take on how all the institutional Bitcoin interest have killed Bitcoin volatility. That's true. They have. Because your Bitcoin ain't moving. Look at it. That's why, back in your comment, this is why they're buying the ETF and they're shorting the futures. Because when you've got such uncertainty across the board, any fluctuations in price, you're going to profit from it. Spot, you're favoring higher prices, prices going up, quickly take a bit of profit. Same time, it's going to come down, take a little bit of a short, happy days. And they're actively opening and closing positions like that. That's why when Bitcoin ranges out, it's a hedger's dream when Bitcoin does this. Absolute hedger's dream. They're hedging right now as we speak. Is now a good time to buy XRP? Anyway, I've just deleted it from my checklist. That's what happens when you mention XRP, all right? It gets deleted, removed, right? Asking me about a stupid coin. Active wallets right now are slumping for XRP. Slumping. Why? XRP is forbidden to be mentioned on this channel. Anyone that comments XRP on this channel, okay, and asks, where do you think Bitcoin or XRP is going to go? You're getting muted, all right? Done. I'm not having it. I'm not interested in XRP anymore. No thanks. Mr. Tino, green vector, red vector explanation, please. All right, that's one of the strategies on the Traders Reality website. If you become a member over there, you'll then get access to these PDFs that talk about it, okay? And it would be the PDF, wait for it, because it's right here. Where are we? Here we go, red vector candle strategy, okay? And what that shows you is when you get a red candle, green candle formation, which is something like this, something like that, all right? Now, it's all about where it appears. You can see that's appeared at a key moving average and it's failed to break it, okay? So the logic says, all right, you will want to get out. Why are you saying XRP? What? Moderators, ban them, mute them. Mute the people that say, nah, I'm joking. Don't do that. Nah, I don't know. Really? Nah, don't do that. That's not nice. Nah, man, they're talking about XRP. I'm not talking about it anymore. That's it. It's done. But anyway, red candle, green candle formation is it's like a stop run. It's a quick accumulation, redistribution, up she goes. Okay. And all you need to do is go and have a look for this formation right here. Go and find this structure, red candle, green candle, or green candle, red candle. Go and find it, but look at where it is relative to where price has been. Okay. What has it come? Where's it come from? Okay. So when you look at price, okay, so let me give you another example right here. This is on the 5-hour time frame, all right? So it's a better price, better way for you. All right, so you've got this one right here, which is a red candle, green candle formation, okay? And it effectively leads to a move up, but then you look, it ends up making a big move higher, but this is a higher time frame. Here we go. Green candle, red candle formation. That is difficult. Why? Because it's just flat in the middle, and you've obviously got a red vector candle. It's hard to navigate how and where price is likely to go because your thought process with this is I'm expecting a recovery back up, but you would have then experienced this and then it would have come back up. So you would have to have absorbed a big drawdown. But to try and find you a smaller one, just to make it easier for you, here we go. Red candle, green candle formation right here. So you got that one right there. Okay. Red candle comes down, green candle comes in, they recover, and then it climbs back up. Where's it come from? It's come from a move down. Vectors trading into it. The whole point of the hybrid system is to see where prices come from and what is it that you see happening or what has happened to suggest the idea that it favors price going back into those imbalances, which is the red vectors. So what's happened? It's dropped. What hasn't it done? Recovered the vectors, okay? So then when you see the red and the green formation, tells you that that was an attempt to go down, to trap, to reverse, to move back up, okay? But what you got to understand is this. Yeah, I'm dealing with hindsight right now because it's bullshit when you deal with hindsight. But look at it from this perspective right here, okay? You're looking at this candlestick and you're saying to yourself, right, I'm going to try and trade the logic of price going back into this whole recovery of the range. I've got to factor in that there's a chance that they might actually recover this vector candle. So then you're going to allocate your risk and say, okay, I'm going to take a long on here to trade back into the idea of price going all the way back up there. From this current price point of 101,920 all the way up to the full recovery of that point, it's nearly a $4,000 move in Bitcoin. You can't be happy with the $4,000 move on Bitcoin with leverage. Come on, man. And then, of course, and you see it comes into play, you factored in the retrace, the violet vector candle, because then you've got red candle, green candle formation, but then you've got green candle, violet candle formation, which is a continuation pattern, and then up she goes. Okay? Those are all the things that I talk about in those PDFs, ladies and gentlemen. All right? So that's where you get all that understanding from. But just go back in the charts and just try and find those patterns and just look at how price has behaved before. Look at what it's doing and how likely is it going to start working its way back to where it came from. All right? Always ask yourself where it's come from, because where it came from meant there was an intention for it to go in this direction. So if it's going to try and do the same thing again, price is going to go back to that point to achieve the same logic. If it doesn't, it's going to keep going up. In other words, rise, retrace, continuation. Yeah? Drop, retrace, continuation. Yeah? That's the fundamentals of how price always ebb and flow, zig and zag, and all that madness. Okay? All right. What we got here? What have we got going off here? Where's the wife? Where's my wife? She's left alive. So dead. Anyways, who? What? Ha ha! Pancho. Hindsight does pay, because Steve Murray put it quite clearly. If you can't see it in hindsight, you ain't going to see it in foresight. You ain't. You won't. If you don't know what you're looking for, it's not that. No. If you don't know how it develops, then what are you preparing for? If you don't know how it develops, what are you preparing for? I promise you, right? Every V-shaped reversal will start with a vector and finish with it. It will. Look, this is the 1 hour time frame. That's a V-shaped reversal. There's vectors inside of here. It always starts off with a wild move. 1, 2, 3. V-shaped reversal. Done. Right? Red candle, green candle formation. Inside of here. Okay? What else have we got? Give me another V-shaped reversal Bitcoin. I mean, Bitcoin's a shocking thing, but there you go. Red candle, green candle formation on the hour time frame. Right there. Okay? No. Red candle, green candle formation. 1 hour time frame. Look what it leads to. Right? Red candle, green candle formation. Now you know what you're looking for. So then when you see a red candle and then a green candle comes into play, vector. Look at the environment, trade back into the red vectors. At minimum, you're going to try and take advantage. It doesn't guarantee it. I'd be lying to you if it's guaranteed every time you see that. Don't make that mistake of thinking every time you see it, it's going to guarantee a win. That's bullshit. But you improve the odds of a trade working in your favor when you understand what you're looking for. So, I've identified there's a pattern right there. There's a red candle, green candle formation. I've gone back in the charts and trained my eyes to be aware of how likely price is going to do the move that I expect it to do when I see that move. And then I just take the damn trade. And I can take that trade with zero expectation, right? That if it goes against me, I lose a couple of grand, okay? If it goes in my favor, I make a couple of grand. So I'm happy with the outcome. Either way, I know the result of my decision. I'm either going to win or I'm going to lose. I ain't going to be bitching about what someone says on X because Bitcoin's made this move to the downside and someone's gone long and this is it and then blockchain and all that shit. No, there's no point. I've got to eliminate any prospect of me being challenged by my decision. That's my entry point right there. This is my exit, and let me just let it play out. You know? Is it going back to high? This is it, man. Everyone's asking the question, is it going to go back down? Tino up or down? Tino up or down? What's this one? Well, listen, if you are new and you haven't subscribed already, make sure you do. Yeah, buy more gold. Make sure you do, because tomorrow is the FOMC, and that's going to be a big day tomorrow, okay? But is Bitcoin going to go down below 100K? Well, they're calling for Bitcoin to go to 100K. And you know what? That's cool if it goes down to it, because, well, you've got a vector candle recovery zone here. And you've got a vector candle recovery zone right here. Well, you think you want your Bitcoin to go to 150 or 180,000, 200,000 Bitcoin, right? And not get any collection of orders. You want it to come down. Pick up the bids. Expansion. Contraction. Expansion. Done. It really is that simple. Yes. Should we expect any unusual activity tomorrow, knowing the US market closed on Thursday? Well, they're going to have only tomorrow to make the move that they want to, you know, because the FOMC tomorrow comes out at 7 p.m. UK time. All right. So that's 2 p.m. Eastern Standard. So I will be going live about 30 minutes before the actual FOMC. All right. So that gives people enough time to check in. And then we're going to start talking about what we can expect where price is going to go and what have you. So, you know, tomorrow I'll be live 30 minutes before the federal funds rate. Then we'll be live straight through until the press conference, which will take us to about 8:30 in the evening. Okay, UK time. Tino, yo mama. My mum. What do you mean? People are calling for the same pattern we had back in 2021, double top before breakdown. Human nature. The juiciest happens after market close. That's correct. Yes. Tino, could you make a PDF on invalidating the position to basically see where to get out of it? Stop loss. It saves me writing a PDF. The old saying holds true. Good traders cut their losses. Great traders change direction, right? But it's how well you know your asset. If you know your asset and it's like, all right, it's coming down, it's going against me, I know it's going to reverse from here, because it usually does that. And my experience tells me that usually when it's done that move, I'm expecting a reversal. I'm in a long, I'm losing. Right, okay, cool. Bang, cut the long, cut the trade, and then change direction, or cut the trade, add to the position, whatever it is you're going to do, all right? If it's going against you, change direction, go to the shorts. It all depends on how well you know your asset. When you jump between certain asset classes, then it's a little bit hard for you to work it out. But the saying holds true. Good traders cut their losses. Great traders change direction. Because it's on the assumption that I've hit my stop loss. That's it now. Okay, I'm done for the day. No. Because if you've spent all day monitoring the asset, right, and you've witnessed that it's breaking down, and you're looking at an area that you don't want it to go to, right? And if you do allow it to go to it, you're going to lose your account. Well, if you're watching it breaking down, then you cut the trade and walk away and, you know, cry about it, you've missed out on the opportunity, because you're guaranteed that you come back to the chart, you're going to see it go to that point that you didn't want it to go to. It's the mindset of being able to say, forget it. I'm going to change direction, go short, and see what happens. That's how trading is, man. That's how trading is. And you know what? I don't trade with stop losses. I don't. But if you're new, you have to get used to the idea of taking a loss. You have to. Because if you don't trade with stop losses, you're wiping yourself out. You will be stopped from trading. But if you trade with stop losses, you get to the acceptance that it's part of the game. When you get comfortable taking stop losses, you then start to adjust things. And then, of course, when you get more experience and then you understand your asset even more, you'll have more comfortability in not putting stop losses. Stop losses are all about your management of your risk. And if you can't cut a trade then you have to force a stop loss. Well, if you can't cut a trade without a stop loss and you keep moving your stop loss when you're in a trade, what's the point in having the stop loss if you keep on moving it? That's why you always have that debate about traders using algos and what have you. Tina, I've been trying to know volume profile just now on gold. It looks like we're on the point of control. Volume profile is simple, okay? And the way you use it is it's reactionary, okay? So here's an example, right? Take a volume profile, take the swing, take the high, okay? So this tells me that this move from this low all the way up to here, this is the interest, okay? Well, there's Bitcoin with the point of control right there. So the logic says that if these guys or price comes down towards that point, because remember, if you're going to do it on the basis of from this low to this high up here, okay? You're factoring that all of this here doesn't exist, okay? So then when price comes down to the point of control, you're asking yourself, if the interest is there for them to mark prices higher, I expect them to go up, all right? So then you'll monitor it. And if you do take advantage of it there and you see a little bit of a return, cool. But then when it starts to break down, you'd naturally be thinking that because there's a vector candle there and it's not been recovered. You want to see them recover the vector candle and then move away from it, but they don't do that. So then you start thinking, hold on, volume profile is saying to me that there's obviously more bid interest in this zone to the downside. Yeah? You know, do you hate XRP because it filled the gap between the ears of the past? No. Dutchman, you, man. I always read your dead comments. If we see USDC and USDT inverse, then it's game set for circle. Agreed. Yeah. Yeah, that is true. I agree with you, Priest. I agree with you. What times do you typically trade? ICT says 1:30, 3:30 GMT is good. Look, when it comes to times of trades, okay, the issue that we've got right now, okay, is at any time you can hear information like you've got a war pending, all right, or it's happening. So price is just going to react to that information. What I need to see on the NASDAQ, right, when I'm trading NASDAQ is, I mean, this is, it's shocking. It's very small movements, okay, especially for the brinks. Like if you're not capturing the move from the start of the brinks, all right, again, one move and then you get this chop all here and then you get close towards the end of the day as such. It's 5:30 UK time. I mean, at 5:30, 6:30, I'm looking for opportunities. But when I see that price is going sideways like that and we're heading to FOMC, history tells me that it's probably going to stay like that. And of course, you hear news about the war, it then slumps. So it's circumstantial. I know that the time that I'm going to trade is when there has been a move. All right. So when I see NASDAQ move away from the VWAP, so when I'm using the EXO charts to understand the VWAP, so you got to understand, look at it like this. So when I came straight after the live, I'm looking at NASDAQ and it's just VWAP rotation. And I'm like, oh, for fuck's sake, like this is standard. Okay. Then Trump says we're going to start getting involved. And then NASDAQ just takes a tumble to the downside. Okay. What I'm looking for is if there's no mad news, okay, and it's just a normal trading day, right? I'm looking for NASDAQ to break away from the VWAP, whether it's to the upside or to the downside. And if there's no news that is impacting that, in other words, the war's happening, because if we didn't have Israel and Iran, all right, in the war, we would have normal trading days. Because if you noticed, there's not that much being discussed about tariffs. There's no pressure with that anymore. Investors are pricing in the idea of what it's going to be like with tariffs. So the market's moving fine. But because the war's coming into play, investors are coming out of stocks and they're going into commodities, oil, and they're effectively like trying to hedge themselves. But this behavior here, I'm waiting for a move away from the VWAP. When it moves away from it, I'm looking for a scalp back into the VWAP. This would be an example, okay? That could be an example. I'm looking for W formations on the NASDAQ on EXO charts. I'm telling you, NASDAQ always creates a W formation and makes a move from it. Go to the 1 minute time frame and just go back and look at them. They do them all the time, all shapes and sizes. Look, W formation right there, vector candle, recovery, environment. Look left, sweep the Asian session low, Brinks box low. So you're adding the confluences to add together. You've just swept all that liquidity. Okay, then cool. You're broken out of there. Short sellers have come in and they're now been trapped. Absorption coming into play, stopping volume candle, moving away from the moving averages, opposing side. And you can exploit easy 300-400 ticks on the NASDAQ with the movement. And this usually happens around 1 p.m. UK time because the bond market opens at around 1:30 UK time, all right, which is 8:30 a.m. Eastern Standard. Everyone's looking for the New York Open, but when you pay attention to the bond market open, all right, it's a different environment. That's when the true money comes in the bond market. Then the New York market is just everyone like just woken up in the morning like, yeah, baby, let's go. All right. That's why you see all this shit show right here. But I challenge you all to look for 1 p.m., 1:30 p.m. UK time, which is 8:30 a.m. Eastern Standard. It's when the bond markets open. And when you see an influx of liquidity going into the bonds and it's favoring higher prices, so you see lots of offers coming in, usually dictates the rest of the day, because if bond buyers are coming in plowing into that, then the idea is they want low risk, and then the NASDAQ's like, oh, the bonds are going up, the yields are going down, stock market going up. That's how I navigate the times. I don't think, oh, ICT says between 1:30 and 3:30. I don't think of it like that. I think, what's happened right now? Oh, it's dropped. What time is it? 3:30. Okay, can we trade a reversal? Fine. But I don't limit myself to those times. It's just when the move happens. And if you do go back and look, yeah, between those times, you tend to see the move. UK time, that is, you know, and then Eastern Standard. So it's all relative. Yes, it is unhinged. Anyways, ladies and gentlemen, with that being said, mad love and respect. I said it was going to be short and sweet. Clearly not. Nearly 40 minutes. That is so dead. Make sure you subscribe. Tomorrow is a big day. All right? Be careful in Asia tonight, ladies and gentlemen. Mad love and respect.